So what are the top 3 indicators for beginners? What's going on, team? It's Ricky with TechBud Solutions. I hope that you guys are all having an amazing day. And this is a question that a lot of people ask when they're just getting started. One of the first things that I want to invite you to is, if you're absolutely new to trading, make sure you click the first link down below and you guys can join our absolutely free Facebook group. We're one of the largest free investing groups on Facebook with over 314,000 members. And again, that's that first link down below. A lot of you guys have been commenting on my different shirts. They're super inexpensive shirts, from everything from my mousepad shirts to even wall art. You guys can get 25% off on Shop TechBud's third link down below. And again, just make sure you guys use promo code SONS at checkout for an additional 25% off. Let's go ahead and jump into today's video. And I'm going to be explaining and breaking down, based off of my opinion and preference, my 3 favorite indicators on the Webull platform. If you guys haven't downloaded Webull, the link is down below for you guys to learn a little bit more about it and see if it's the right trading platform for you. So one of the first ones that I want to talk about is the RSI indicator. The RSI indicator is known as the Relative Strength Index, and the way that I use it, and the reason I find it to be such an effective indicator, is whether you're day trading, whether you're swing trading, or even if you're investing, I like to use indicators solely as a reference, never as a sole reason on why to take a trade, right? And make sure you stay true to that, right? Because if you just begin taking positions or buying stocks based off of whatever any indicator begins to say, there is not one indicator out there that is 100% correct 100% of the time. So make sure you understand that. But the reason that I like these indicators is kind of like Apple, right? It's very safe to say right now, Apple on the 4-hour time frame, you guys can see that it's been super bullish and it's been showing higher highs and higher lows. And this is why it's very important for you to understand that indicators are useful, but they're not always correct. The Relative Strength Index pretty much just tells you when a stock is overbought, meaning no longer a good deal, so probably more of a sell than it is a buy, or when a stock is oversold, meaning that it's more on the cheaper side, but it doesn't mean that it has to recover. It can still continue to sell off. And you guys can see here that on Apple, ticker symbol AAPL, it's been making higher highs and holding above the EMA line. You guys can see the RSI indicator right here. I have a length of 70 and then a length of 30. So normally when the RSI breaks above 70, that normally begins to hint on the idea that that stock is a little bit more on the overbought side, meaning no longer a good deal, rather than it being something that you actually potentially want to buy into. But Apple has recently been so bullish for the past 2 to 3 weeks that you can see that it surpassed 70 RSI about 2 weeks ago. This is when it broke above around $130 a share. And ever since then, it's been above the 70 RSI, but it still continues to rise. And why is that? Well, there's a lot of momentum, a lot of positive catalyst that is driving the price up right now on Apple. So although it's not a cheap stock, it's still very bullish. But the reason that this is so effective is in times like this, right, where we begin to really push up, you can see that the RSI indicator begins to indicate that, hey, we're a little bit more on the overbought side. It might be due for a pullback. The way that I simply view it is it's very useful to use as a reference when a stock is either oversold or overbought, to have a better understanding if it validates your technical analysis or your fundamental analysis on when the pullbacks are about to happen or when the stock is about to make and show signs of a reversal. So again, RSI indicator is a very, very useful indicator, and having a better understanding on overbought and oversold levels. The second indicator that I need to talk about is the EMA line. This is the exponential moving average. It's a very, very popular indicator, and I'm sure a lot of you guys know about it. Right now, my EMA line on my platform is a length of 30. You can play around with the different lengths. The longer you make your EMA indicator, the slower it tends to move. The shorter you make your EMA indicator, the quicker it begins to move. So depending on the stocks that you trade, if they're more volatile, you probably want a shorter EMA. If they're not as aggressive moving, then maybe you want a longer EMA. So just make sure you mess around with it, and depending on the stocks that you trade, just make sure that the EMA indicator and the length that you're using is most suitable for you. So taking that into consideration, I think it's very safe to say that the EMA indicator all we ever want to do is, I want to put my money in stocks that are showing signs of growth, right? That's the whole intention of trading or investing in the stock market. And this EMA indicator, especially on the larger time frames, when the overall pattern is trading above this light blue line, this is the EMA indicator. You can see that it pushes up, it pulls back, it validates this EMA line as a support. As you can see, it consolidates here, it breaks back above, it pulls back, it validates it as a support, pushes up, pulls on back, and it continues to show this slow upward staircase pattern, and it continues to follow through this channel with the EMA line acting as a support level. This is why EMA lines are so useful, again, to be used as a reference, but never as a sole reason on why to take a trade or why to reduce your position size, just more as a reference of, again, if there's a breakout pattern or if we begin to trade below the EMA line showing bearish patterns, now it's doing the exact opposite. We were previously showing signs of growth as we were trading above the EMA line, and then guess what? It begins to consolidate, showing signs of a resistance, and then it begins to trade below the EMA line, showing signs of lower highs and lower lows. So now the exact opposite. So once it breaks below the EMA line, then that's when I would personally consider the idea of locking in profits or reducing my position size in effort to prepare for a pullback. It's not about predicting the future, it's simply about preparing for it. And I think the EMA indicator does a great job in allowing you to have a better understanding of when to expect those reversals. The last one that I want to talk about is the SMA line. This is the simple moving average, and the SMA line is most useful for more swing traders and people that are holding more long-term positions. And the reason why, it moves even slower than the EMA line. So make sure you compare the two, and depending on your trading style, you don't have to use both, but just use whichever one is the most useful for you. As you guys can see, the EMA line is all over the place depending and closely follows the candles and the charts, right? But when it comes down to the SMA line, it's more of a slower moving indicator. And the reason that can be so useful, it can tell you more true direction instead of you getting in and getting out very quickly on a series of different trades. Because it moves slower, it gives me more of a true direction of if the stock is bullish or if the stock is bearish, because it takes so much more for it to move according to the overall direction of that specific stock. And you can see it both on the big charts, but also on the smaller charts, right? You guys can see that there's many times, even on Apple today, where it pulls on back, and it's not exact, right? But where it pulls on back and it validates the SMA line as a potential support. It pushes up, it pulls on back, it validates the SMA line as a support here, 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 and here. So you can see how it can be useful in understanding support levels and resistance levels. And like we all know, right? Old support levels can become new resistance levels, and old resistance levels can become new support levels, right? And you guys can see that the SMA line, although it acted as a support here, it acted as a resistance level here. And we see that both on the 1 day, 1 minute chart, and of course, on the 4-hour time frame, where sometimes you're doing an analysis and you can see that the SMA line is acting more as a resistance level and less as an actual support. But now that the stock is bullish and we're trading above, it's showing bullish patterns. And again, the SMA line is more likely to be viewed as a support versus a resistance, as now we are trading above. So again, I like to use the SMA line, which is the light green line that you see right on over here, more as a true direction of the stocks that I'm partaking in, or at least interested in. I use them more for blue chip stocks, and I really like to look at the big picture so I have more of a better understanding of its true direction. The EMA line is, again, great for day trading and even great for swing trading, but again, it closely follows the overall charts and patterns of the stock that you are looking at. So make sure you take that into consideration, that sometimes when there's a lot of consolidation, the EMA line is not always the most effective. But again, when it has true direction and a true channel like this is where I find the EMA line to be the most useful when it's bullish, and of course the most useful when it's bearish, understanding that we have either a bearish channel or of course a bullish channel. And one of my favorite, again, it's such a simple indicator, it's the RSI indicator, and it's just so useful in understanding when a stock is overbought and oversold. People ask this question time after time of, hey, is this stock a good deal? Is it cheap? Or is this stock overpriced? Is it expensive? And this RSI indicator just makes it that much easier to use as a reference to have a better understanding if it is overbought or if it is oversold. But again, like we said, it's to be used as a reference. Just because something is overbought, Apple being a perfect example, doesn't mean that it has to pull back. Just because a stock is oversold doesn't mean that a stock can't continue to sell off. So make sure you take that into consideration when deciding to choose any indicator in using on your platform. Also, if you want to learn more about different indicators that are available, I talked about my top 3 in this video. I'm going to be linking an article down below where for absolute beginners, you can have a better understanding and more in-depth approach when using these 3 different indicators, and as well as a couple different indicators that you can learn more about to see if they're more useful for your trading or investing style. And of course, that article is going to be linked down in the description. I hope that you learned something new in this video. If you guys did, make sure you drop a thumbs up. Please consider subscribing, and don't forget to stay connected with our free Facebook group, and that's that first link down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.